Hey guys, I'm Tim Kotzman here with James Seyffart. James, how's it going on this fine Wednesday?
It's going well. I mean, we have Bitcoin ETF options trading today across a bunch of different ETFs, and volume looks good. And I mean, if you look at MicroStrategy stock, it's soaring to the moon right now. So there's a lot of moving parts in the crypto TradFi overlap world right now.
Yeah, I saw Eric posted maybe an hour ago that MicroStrategy is currently the most traded stock in America today. So that's a first. What does that tell you about the moment in time that we might be in?
Yeah, I mean, things are. I mean, if you just look at the chart of MicroStrategy, I mean, at some point you feel like this has to succumb to a little bit of gravity. The infinite money glitch. I don't know how long that can last for, but obviously Michael Saylor thinks it can go on forever. And I guess if Bitcoin keeps going up, it can. But I mean, if any history is an indication that it'll come back down to earth at some point. But yeah, MicroStrategy. It's traded $22.2 billion worth of shares today, while second place NVIDIA is at 22.15, and Tesla down in third is all the way under 15 billion. So yeah, MicroStrategy by far and away the most traded stock in the US today, November 20th.
And then are you able to see anything on the option side of MicroStrategy or the levered ETFs, one or the other or both?
Yeah, I mean, everything is through the roof. I mean, it's all kind of compounding on itself. Like options are volume is way up, and if you look at like the leverage MicroStrategy ETFs, like the two main ones are MSTU from T-Rex and MSTX from Defiance.
Mm-hmm.
I mean, just looking at the chart is insane. It's like it's exactly what you expect. It's double the extremes of what the MicroStrategy chart looks like. But MSTX from Defiance has 1.8 billion. MSTU from T-Rex has 2.8 billion. So I mean, you've got like nearly $5 billion in 2x levered single stock MicroStrategy ETFs, which like a single stock levered ETF is almost kind of like an oxymoron. Like, what do you mean single stock ETF? But they're relatively new over the last couple of years, and my God, they are taking off. People love to gamble in the US.
How many single stock levered ETFs are there? Is it in the single digits or double digits at this
No,
point?
so I don't have it in front of me, but there's a lot. It's definitely in the double digits, if not triple. But it's there's a lot of them out there. The
Mm-hmm.
problem is that most of the assets coalesce around like a handful of names. So like the NVIDIA NVDL. Let me look at the number right now. Granite shares 2x levered NVIDIA ETF NVDL.
Mm-hmm.
That thing has $6.7 billion in assets alone as a fund. It charges over 1% management fee. There are ETF issuers that would kill to have a fraction of that across all of their ETFs and charge a fraction of that fee. So Granite Shares is actually raking in the cash. So the most common levered ETFs tend to be things that are like very volatile, very momentumy, very social media talking darlings. So
Mm-hmm.
Coinbase, there's a few very successful levered Coinbase ETFs. Obviously, MicroStrategy, Nvidia, those are the names that tend to do Tesla ETF, levered Tesla ETFs were the big dogs in the room until Nvidia came along. So it's really those names that are highly volatile are the ones that tend to get a lot of interest. And then there's plenty of other single stock ETFs, both inverse and long. They just don't have anywhere near the level of assets, but some of them, even the ones you probably didn't even know exist, have like $100 million in assets, which is way more than enough for these issuers to keep them live and going as trading vehicles for people to invest in because it's profitable for them. So what's happening is a lot of these issuers are kind of like throwing spaghetti at the wall and seeing what sticks. And obviously, the ones I mentioned are the ones that are definitely sticking, and they're trying other ones. I actually just saw a filing for like a Berkshire Hathaway 2x levered ETF, which it doesn't fit the category of what has been successful for the leverage single stock ETF category. But I mean, you throw in Warren Buffett name in there, all of a sudden maybe it will garner some level of interest.
I mean, I guess it could just expand quite a lot. I mean, someone mentioned to me this morning that Walmart is up 70% on the year. I mean, could this just kind of be a growing category?
Yeah, no, it's one of the fastest growing categories out there. I mean, if you just look at ETFs, one of the fastest growing categories of ETFs is ETFs with options as a primary part of their strategy. So covered call ETFs, all of these single stock ETFs, they operate by getting the exposure through swaps, levered ETFs, anything out there that's using options. It's like the fastest growing category. They're structured outcome ETFs. So basically, what those will do is you have like buffered downside protection. So if the market goes down 10%, you're not subject to those losses, but it goes beyond 10%, then you're subject to any losses beyond that, things like that. And to get to that level, you have to give up some level of upside. And those are done using options or flex options. So basically they'll sell calls, buy puts, do different things to like give you a structured outcome that says this is the range of outcomes you can have. You're not going to lose more money than this, but you also won't earn more money than this and things like that. So those ETFs are extremely hot in the market right now. So anything related to options and derivatives, so hot right now, if you will.
Yeah. Hey guys, today's episode is brought to you by Stampseed. I would just recommend that you go right to stampseed.com and check it out for yourself. I've held it in my hand. It's a titanium seed phrase storage device. This thing is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount on the entire website. That's TIM15. Is there anything on the market that's more than 2x long levered ETF, meaning like MSTX was approved first at 1.75, and then MSTU was approved at 2x, and then MST, the first one, like put in an application for, or whatever that process is to go up to 2x, and then that was approved. I mean, where does this go from here? Like, as far as your thoughts?
Yeah, so there's derivative rules. So there won't be more than 2x in an ETF wrapper. Technically, you could do that via an ETN or an exchange traded note, which is a form of an ETP. It's similar to ETFs, but people don't like them as much. So in the US, they came out with this new, like basically forward leverage ETFs, and it's derivatives rules and leverage rules, and it has to do with VAR, and there's limits on how much leverage you can put on different ETFs now. So there are some out there that are more than 2x, but for the most part, anything coming out now, particularly single stock ETFs, aren't going to be likely more than a 2x. But if you go over to Europe, which no one really even cares about, there's like 5x, like the Qs ETFs. There's 3x NVIDIA ETFs out there. So even more leverage than some of these products we're talking about, but the amount of dollars in them being traded over there or even just assets in those products are way, way, way smaller than what we have here in the US. I said it before, like, investors, traders in the US just love to gamble. They love volatility. They love leverage. And that is not the same case for investors over in Europe.
The IBIT option started trading yesterday. What was the performance versus what your expectation was, and any other thoughts that you have on that?
Yeah, so I didn't have a ton of expectations because part of the problem is when as you are aware, I'm assuming a lot of your listeners are aware, the process for getting a Bitcoin ETF approved or an Ethereum ETF approved, really any commodity ETF, is like very complicated. It's very convoluted. There's all these dates and deadlines, and that's because they're 33 Act ETFs, and they don't go through this other process called the ETF rule. So these ETFs have to go through all these delay, deny, or approve processes to get through the SEC's approval process. Most 40 Act ETFs have a different process. That's how it was different for the Bitcoin futures ETFs. It was different for the Ethereum futures ETFs. Essentially, they file, and then after 75 days, as long as the SEC doesn't like stop them, they can list. That's part of what was known as the ETF rule. These products we're talking about here don't go through that same process, which also means that the options process is very different. For those Bitcoin futures ETFs, those Ethereum futures ETFs, they had options trading basically from day one. So it's not really apples to apples because all of these other ETFs have built up tremendous volume. IBIT specifically is one of the most traded ETFs in the US right now. And so like taking that liquidity and looking at it and being like, how does it compare to other first launches? It's not really apples to apples because you don't really get these types of ETF launches too often. And honestly, you don't really see many ETFs get through this process. So the process for these ETFs is they have to get approval from the SEC specifically to list options. Then they also need approval from the CFTC and OCC. And we got that sign off on Monday from the OCC after getting sign off from the CFTC last week. So like all these, alphabet soup of government agencies have to sign off on these things. And not all of these ETFs, not all of them got the ability to trade options. So IBIT was the first that started yesterday. Today on the 20th, you had both of Grayscale's products, GBTC and BTC. You had Fidelity's FBTC, Bitwise's BitB, and ARK's ARKB. All of them are started trading today. So, but the vast majority of the volume today is still in IBIT's products. So overall, you look at it, it was 1.9 billion on day one. We crossed 1 billion around 1 p.m. today, last I checked. So it's looking like it should be an even more trading volume in these contracts. So I mean, overall, it's been a smashing success, and we can talk if you want to get into like the details of like what actually was traded and where the money was going. We can do that.
Yeah, absolutely. If you want to dig into that, I think people would be very interested.
Yeah, so it was heavily to the calls. It was heavily skewed towards calls. So oftentimes we talk about something called the put call ratio, and it's basically if it's at one, that means there's an equal number of puts traded and an equal number of calls traded. In this case, the put call ratio yesterday was like 0.22, so it was heavily skewed to call options. Roughly 4.4 times the amount of call options were traded than put options. So huge demand for calls. That's one. The other thing is almost all of those calls, 90+%, were out of the money. So basically, it's just call options on upside for Bitcoin. And in many cases, they were very out of the money. So the most common one was like the $55 strike for IBIT, which is equivalent to like 97,000-ish Bitcoin, 98,000 Bitcoin. But the third most traded contract strike price was $100 on IBIT, which is $180,000 per Bitcoin price. So a lot of people are just taking lottery tickets on this thing. So the skew was heavy to out of the money risk taking options on IBIT, and it seems to be the same today. Actually, when I looked across the board at all the new ETFs and you look in aggregate, the volume is even more skewed to calls today. I haven't looked specifically at the strike prices, like was there as much traded at the the $100 strike price on IBIT equivalent or that high level near $200,000 per Bitcoin. But it's under 0.2, which means there's 5 times the amount of trading in call options right now on these Bitcoin ETFs than there is on put options. So that's like very bullish because obviously market makers are trying to make markets and people are buying up upside optionality on Bitcoin prices. How much of that is just like this is what's happening right now? They just started, and maybe as the market matures, it will even out a little bit. There'll be more people like using these products to hedge and could be stabilizing to the price of Bitcoin. I think options could theoretically lower the volatility of Bitcoin, but right now I'd argue it's probably the opposite. So yeah, I don't know what's going to happen longer term, but it's definitely tilting towards calls. And that honestly, that tells me it's a lot of retail traders. I mean, if you look at like GME and the meme stock craze and call options, and people are just basically taking flyers on out of the money call options on Bitcoin related instruments. And we're seeing it more than just the Bitcoin ETFs, similar outcomes in, MicroStrategy and other types of products.
Yeah, that was going to be one of my other questions or inquiries. Is it seems like on some of the chatter on CNBC, people were saying the volatility would go down, and then some well-regarded analysts are saying the volatility is actually going to go up on Bitcoin. So it remains to be seen, I guess.
Yeah, I would say short term, I think it's going up. I honestly think that these options coming online likely are driving us to where we are now. We're in new all-time highs. Or last I checked, we were over 94,000, around 95,000. Oh, we're back under 94. But I mean, I think undoubtedly these options probably help push the price a little bit. But I do think over the longer term, I think it's going to decrease the volatility of Bitcoin and these Bitcoin ETFs specifically. How long does it take to get there? I don't know, but there's going to be institutions that come into this space and launch products. Some of those structured outcome type products on Bitcoin ETFs, but there's a lot of hurdles and guardrails up that's not going to allow that to happen just yet, which we can get into.
Yeah, do you want to dive into that a little bit?
Yeah, so these were approved in September by the SEC. We only got the final approval from the CFTC and OCC last week. Or actually, honestly, the OCC letter came out earlier this week, and IBIT launched the next day. But part of the approval process through the SEC was that they had a contract limit. So you can only there's a position limit on how many contracts you can hold. And there's a 25,000 contract limit on each ETF. So there's a few things there. One, that means like institutions that are really trying to trade this, or particularly if they're trying to make products and sell it to other clients, whether it's an ETF or a structured product from a bank, there's going to be limits on how much of these things they can hold. So that's a detriment. They also don't have flex options, which is typically what's used for those, specified client products. A lot of these structured outcome buffer ETFs, they use flex options. Those aren't allowed in these ETFs yet. I think they're coming. Most ETFs, vast majority, north of 80%, have position limits of something like 200,000 or 250,000 contracts. That's the norm. Honestly, IBIT's volume, FBTC's volume, BitB, ARCB, all Grayscale, all of their volumes indicate that they can handle a much higher position limit than 25,000, in my personal opinion. But the SEC is worried about manipulation of the underlying Bitcoin price. So if you wanted options, their hard and fast rule was you're not going to go, we're going to set position limits of 25,000, which honestly, I guess it kind of makes sense, at least to start. They just want to be sure that everything's working smoothly. They don't want any manipulation of the Bitcoin price via ETF options. That said, I have to assume that they're going to eventually increase those position limits. The one benefit here, I talked about a ton of the volume is going to IBIT right now. That's the vast majority of the volume, like 90+%. I granted the other ETFs just started trading options today. But if you run up into those position limits, you can just start using the options in the other ETFs that now have options trading. So it kind of might help like drive some volume to a more diversified to make things a little bit more competitive. But right now, if you look at the numbers, it's not competitive. All the volume's going to the IBIT options. And honestly, IBIT is dominating the space as far as volume and assets go too across all the ETFs. IBIT is the juggernaut in the room. And it's not really that surprising considering BlackRock is the largest asset manager in the world. And, they are full-throated behind Bitcoin now at this point in their praise and why it should be part of a portfolio. So they're taking away the crown in trading volume. It's not even close. They vastly surpassed GBTC, and now they have an even more dominant lead in options. So we'll see how that holds up.
Okay, so I was going to ask, the 25,000 contract limit, is that per account or per institution? But it sounds like it's per product. Or can you walk us through that a little bit?
So it's a 25,000 per product. So like if I wanted to build up, I don't have the money to do this, but if I built up a 25,000 contract position and options on IBIT, if I wanted to get more exposure to Bitcoin ETF options, I would have to go to another product. So I'd have to do it with, Bitwise's BitB and maybe Grayscale, ARC, Fidelity, one of those. I would have to start trading options on there if I wanted to get exposure.
Got it. And can you walk us through what applications are in right now for ETFs like XRP, like going down the list, like Bitcoin, Ethereum, like with the new kind of red wave regulatory regime that everyone's looking toward? Like, does Dogecoin get an ETF, or like where does it have an end, or is it just kind of this take us down this road, I guess?
Yeah. I'm going to try to remember all of this, but I'll start with the one that's most relevant to what we were just talking about. So let's start with the different types of filings. So I talked about the convoluted process to get these things approved. For the most part, with these 1933 Act ETFs, you need two approvals. You need both a 19b4 approval from the Division of Trading Markets. That's arguably the hardest and most important one. That's the one that you see the 240, 260-day clock where you see, decision delayed by the SEC. That's the process with the Division of Trading and Markets at the SEC, and they're worried about fraud, manipulation. They want to make sure everything's going to work when these things start trading, and it's the hardest hurdle to get through historically. They also need approval for if you're launching an ETF from the Division of Corporate Finance for the prospectuses. So those documents that come out. I don't know if you've ever read them, but they tend to be very long documents. Just these are all the risks. This is what the fund will do. This is what these investments look like. It's all the risk disclosures, exactly how the fund's going to operate, who's involved, what's involved, things like that. And that needs sign off in the Division of Corporate Finance. The most relevant one to what we were talking about is in 19b4 to allow the list and trading of Ethereum ETF options. So that's one thing that's coming. That's probably going to be approved sometime in early April. I can't imagine the SEC would approve the Bitcoin ETFs and deny the Ethereum ETFs to begin trading options. So the final deadline for that is sometime in early April. So that's one. That's something that I'm very confident in saying is coming. And then you would need CFTC and OCC sign off on that as well. So Ethereum ETF options, that's one thing in the pipeline. As far as ETFs, the more along the lines of what you're asking, there aren't very many 19b4s that actually start that hard and fast process. The few that I know of are Hashdex has an application to launch an ETF that would hold both Bitcoin and Ethereum, and subsequently any other assets that are approved by the SEC to be held in an ETF, essentially. So I think they're probably first up to potentially get approval to have a product that will hold both Bitcoin and Ethereum. There isn't one of those right now, except for futures products, which really hasn't garnered a lot of interest from investors. The next one is Grayscale, filed in 19B4 to convert their large cap fund, GDLC, into an ETF, which is trading at a discount. It holds a few of the big tokens. And then Bitwise also filed to convert their Crypto 10 index, BitW, to an ETF, which also trades at a discount. And they're trying to be able to list and trade that as an ETF. Right now, it's trading like those Grayscale trusts did. Could swing to massive discounts or massive premiums. So there's no real efficiency there because they're not ETFs. So those are what's in the pipeline that actually have hard and fast deadlines. The other stuff you were asking about, there are no 19B4s for them yet that I'm aware of. So you look at your Solanas, your Ripples. There's a Litecoin filing out there from Canary Funds, which is from Steve McClurg. He used to work at Valkyrie, which then became CoinShares, and he spun out and is launching. He's started his own company. They also filed for Hedera Network, HBAR. Like I said, Litecoin already. So all of those are kind of like on the tips of different people's tongues. Some have been filed. Nothing has been filed in a 19B4 yet. So it depends how much this new administration, once Trump gets in and selects a new chairman to run the SEC, we don't know exactly what's going to get approved. But under the current precedent, it's like if you follow what the SEC has said over the last 8 years in approving the Bitcoin and Ethereum ETFs, these other ETFs, Solana, Ripple, Litecoin, you name it, they're unlikely to get approved. Just because the precedent was they need a regulated market of significant size that they can surveil to understand if there's any potential market manipulation. In the case of Bitcoin and Ethereum, that was the CME futures markets. In the case of everything else, there is nothing else that has TradFi futures markets that they would theoretically be able to point to under the prior precedent. The problem is that's just precedent. That's not like the law of the land. Like that kind of has been the law of the land, but there's nothing in writing that says that's how it needs to be done. So theoretically, a new commissioner could come in and be like, we don't need that. We're going to bring more clarity to the space. These are the things that need to occur or have happened that we need to see in order for us to allow these, digital assets to be put into an ETF wrapper. How quickly does that happen? I don't know. But time will tell.
So it could be the new administration, a new commissioner saying something as opposed to something being listed on the futures market to kind of create that market of a significant size to pass that precedent sort of test or threshold. Am I getting that right? Or?
Yes. Yeah, exactly. So if you follow the prior precedent, right, like what has been done under Clayton, the prior SEC chair, and under Gensler, really it's mostly under Gensler, to be quite honest. He's kind of made these rules. You need a futures market, and that future market would need to be like liquid enough and have enough size and open interest and volume for them to feel comfortable that they are surveilling the underlying market and it's not being manipulated. There is nothing like that for the other products we listed. So even if we did get all of a sudden the CME futures market on Solana, on Ripple, on Litecoin, it's not even, it would take time for them to build up, open interest and volume before it would be sufficient enough to meet the current standards. The other problem, specifically with the likes of Solana and Ripple, the SEC and CFTC are at odds on whether those things are securities or not, right? So like right now you have this interagency fight about who has jurisdiction, what's a security, what's a commodity. So like all of those issues, the SEC is actively calling both of those things securities in lawsuits. If you look at the Solana is always listed every time they go after a different exchange, whether it was Coinbase or Kraken saying these are securities. So there's a whole bunch of other things that need to be sorted out before you can get an ETF. Theoretically, if it is a security, you could put it into an ETF somehow, but you need to know clarity about whether it is or isn't. And right now there isn't that clarity, though I expect it will come rather quickly under this new administration.
Can we take a moment to kind of rewind and touch a little bit on your background and your journey to both Bloomberg and Bitcoin and digital assets and how different uh, things are today from maybe just a few years ago?
Yeah. So I started at Bloomberg. I interned here before I finished my senior year. By the time I was in preseason for cross country, I had a job offer and I took it. So I basically had, when my whole senior year knew I was coming back to Bloomberg, I wanted to cover ETFs and hedge funds. I had interned at a hedge fund prior. So my whole history here at Bloomberg has been working in data or research relating to funds. So I basically joined the Bloomberg Intelligence department, which is Bloomberg's research arm, in late 2017. So during the bull market, I'll give a little anecdote here. So I in 2011, when I was in college, spring of 2011, a suite mate of mine put Bitcoin mining software on my college laptop because he wanted to use Bitcoin on, Silk Road. And I was like, I don't even know what any of this is. I don't care. If it's going to get you free money, you just need to use my laptop for a while. You can do it. I'm convinced that blew up my laptop because my laptop imploded, hard drive got burned. I lost I lost multiple papers. So for a while, I hated Bitcoin because I blamed it for ruining it, and I didn't really know much about it. But actually, Kathy Wood wrote a white paper in the fall of 2016 about Bitcoin and why she was so bullish, and that's what got me turned back on from a professional point of view. I didn't join the research side, but I became personally interested. So when I joined BI, I worked with our commodity strategist and our ETF strategist. And there's this perfect overlap because our commodity strategist was like, I want to start covering Bitcoin and crypto because I think it's part of the macro landscape. So I brought him up to speed. That's Mike McGlone, who's been great. And so I started covering crypto directly from that point of view. And there's also this great overlap because I was covering crypto from a commodity strategy point of view. I mean, the Winklevoss twins started trying to file for a Bitcoin ETF in 2013. The grayscale trusts were a big thing back then, and Bitcoin was taking off, going to the moon. Obviously, hit 20,000 before the end of 2017. So, that was my foray first into the space professionally. And then for the next few years, I spent a lot of time looking at the different Bitcoin ETF filings and subsequent denials. And I wrote a lot about the grayscale products and the inefficiencies of them trading at massive discounts, and in many cases, trading at massive premiums. So that's my foray into the space. And obviously, I've been covering it ever since. I became more popular for our calls when we got the Bitcoin futures ETF approval correct. And then ultimately, with our calls getting correct on the spot Bitcoin ETFs. So we were fortunate enough to be correct along the way, every step of the way. We thought the Ethereum ETFs were going to get denied, but of our opinion, there was a 180 change in the SEC to approve those things in May, and they ultimately began trading in July. So that's been my area. Macro, TradFi, DeFi overlap. That's what I spend a lot of my time in. But still, crypto is probably it's probably like a third on a given day of my coverage, what I spend my time on. I do a lot of work in TradFi, ETFs, and other funds.
What resources do you use that others might that you kind of share with others besides the Bloomberg technology and terminal to kind of track things, both professionally and just personally? You're trying to get a snapshot of where the market is or what the sentiment is or kind of where things are going. Anything on that end of things that come to mind?
I mean, number one is the Bloomberg terminal, but it's not great for looking at it's not great for looking at fundamentals on cryptos, like understanding exactly what's going on. We don't really have a lot of good data on that. If you want to look at pricing, you can see pricing sources really well and look at what's going on in the markets. You can see volume and supply in some instances, but true fundamental research isn't that great. I wish I had a Glassnode subscription, but I don't. We used to have one, but Bloomberg really isn't as a whole too super keen on crypto or Bitcoin respectively. It's kind of just something that still really isn't completely taken seriously. There are pockets of it of people starting to take it more seriously, but it's still not completely taken seriously. So that said, terminal is still my number one source. I get a lot of my information from podcasts, what we're doing here. I listen to podcasts constantly. And then Twitter is extremely helpful. I look at a bunch of different websites. I have a bunch of different contacts at different places who are writing research that I get access to. It really runs the gamut. Token Terminal actually is a data provider that looks at a lot of those fundamental data I was talking about, and we actually have they have some of their data on the terminal that I use to look at to try and understand some of the fundamentals of the market. But really, it's just what I just mentioned. I'm sure there's something I'm forgetting that I use, but for the most part, like primarily, that's what I'm looking at.
Awesome. James Seyffart, ETF analyst at Bloomberg. Thank you for your time today.
Yeah, thanks for having me, Tim. This was fun.